All right, guys, welcome back to the channel. An imminent global collapse in this particular commodity always sends Bitcoin and the other commodities soaring at this stage in the real estate cycle. That's a topic for today's video. It's a little bit of an extension on yesterday's marathon 41-minute video looking at September through to the end of 2024. And of course, plenty of data for me to get through in today's video, looking specifically at BTC, the stock markets, some crypto towards the end of the video, and of course, this is all blending in within the real estate cycle. If you are new here, thanks for joining us on the channel. Make sure you hit that subscribe button, as the content I produce on an almost daily basis is essentially a follow-up of the previous day. So there's a lot of data that we get through as we watch the macro bull market continue to rise to new fresh high prices, and I'll show you more of that in today's video. If you are a returning viewer, thanks again. Hit that like button and feel free to share it with a friend. It's your home of macro cycle analysis with me, Jason Pizzino. Been trading and investing now for over 16 years. Let's kick it off with the S&P 500, the second highest daily close in history. Typically, we wouldn't see this sort of thing at an imminent recession, but mostly when the markets break out into new fresh highs and a continuation of a macro bull market. We've seen it throughout 2023 as the price is breaking into new fresh highs, and then early 2024 when the S&P 500 broke out into new fresh highs again. Of course, there's always a chance of a recession. There's always something imminent around the corner. I do want to show you an imminent collapse in prices that is happening right now, and this always sends Bitcoin and commodities soaring towards the end of this 18-year cycle, so the real estate and economic cycle. Now, I've also got some other Bitcoin analysis to get through with you guys, short-term and longer-term, and then, of course, a couple of cryptos as well. But really, just an update here. S&P 500 crushing it, new all-time highs. We're also seeing this around the globe. One of the other largest economies in the world, India, the Nifty 50, a new all-time high price and a new all-time high daily close. It's also risen 19% since the election fears back in June. So 3 months on, 19% up for India. And in yesterday's video, I went through a lot of other countries around the world pushing into new fresh all-time highs. So really not the place where you would see recession start to begin from around the globe. Eventually it'll happen, and eventually a collapse happens from a new all-time high. But on the way to a new all-time high, you get significant breakouts of resistance levels, like you've seen here with India, like we've seen with the S&P 500, like we've seen with the Dow Jones, like we've seen with the NASDAQ. Every time you get a breakout of new all-time highs, once it is confirmed, then you basically get a pretty strong runaway bull market. It has happened throughout history, and I don't think this time is going to be any different. The prices are up there. The markets are moving pretty damn hard, and a lot of these corrections that we're seeing around the globe are quite volatile and basically enough to shake out the weak hands and bring on that fear porn again to keep a lot of people out of the market. And eventually they join the market too late, and that's what leads to a lot of these very steep rises at the end. We saw that a few months ago, actually, when we got that rise into the peak here in July, and there was this bit of a signal there when all of the news was covering the Russell 2000, US Small Cap 2000 Index, the laggards. It's like the last to move did it again. They were the last to move, and this was where the eyeballs were going. Investors, for whatever reason, think that they can catch the end of a trend after they have seen the rest of the market move. The NASDAQ had already been moving for months upon months. The S&P 500, the same deal. The Dow Jones was on its way, and then they thought, well, I've missed out on everything else. Let me just go to the laggards, which has basically been sitting around doing nothing for months upon months, and it has a little pop and washes them all out of the market. So that's sometimes a signal towards the end of moves. In terms of the macro cycle, we're not there yet. There's still plenty of fear that the markets are going to collapse, real estate is going to collapse, and so on and so forth, which we covered in yesterday's video with a lot of data. So let's move on now to a major collapse that is happening, and this has been now exactly 2 years. 2 years since the peak for the US dollar. Here it is. The peak there around 115, and last month's close was one of the lowest monthly closes it has seen in this entire consolidation. Now, if this starts to break down from 100, this would now be confirmed as distribution. So that's basically what the market has been looking for over the last several months, looking to distribute the US dollar before it begins its breakdown onto this next stage of its move to the downside, which brings on the second half of the real estate cycle. We're essentially in that second half now, but this basically spurs on the acceleration of prices going up. And we might begin to see this with Bitcoin and the stock markets once this breakdown begins. So what I've done is overlay the movements of the US dollar and how this is correlated to Bitcoin's price. Now, I've covered this as the market has progressed throughout this cycle. So over the last 2.5 years, as the US dollar ran up into this peak, that was the time when BTC started to collapse. And that's some significant turning points. You can see as one example here, there was a consolidating move at a low for the US dollar. That's what the bar chart is in the background. And the line, the orange line, I've made it Bitcoin. We know Bitcoin as being orange. You can see right at that peak, there's October for the US dollar. And there is October for Bitcoin. We know the price went higher in November of 2021, but it closed lower than October, which is why the line chart only picks that up. But you can see the breakout for the US dollar in November 2021 from this consolidating pattern. So there are some pretty key things that happened at those times, and it happened in reverse as well, that called in the low for Bitcoin in this cycle. The US dollar in November broke down from a support level at about 109, 110, almost to the day when Bitcoin put in its low when FTX collapsed. And again, we know that the low price was November. December closed a little lower, which is why you've got a different reading here on the line graph. And then Bitcoin went on its charge here up to 74,000. Obviously, it's taken a fair bit of time, about 18 months going from the low to that peak so far. But in this period, the US dollar, what I think is happening is basically distributing until it begins to break down again, at which point I think we'll start to see the Bitcoin price head higher and probably break out of this new all-time high, from the 74,000 high into a new all-time high. And so recapping that or back testing it throughout the ages here, going all the way back to 2009, you've got the price of BTC running up, the US dollar coming back down. And it's not an exact peak where the US dollar will peak and then crash to its exact low, and then Bitcoin flips. So there's not an exact correlation. I'm not trying to look for an exact correlation. I'm just trying to look for signs of where the US dollar is basically potentially going nowhere or going down. And that usually brings on higher prices for BTC. So we can see that in 2013, Bitcoin ran up to a peak right here in October, and there's November in the US dollar. It basically stopped out and then started its journey higher. You can see Bitcoin peaked and then started to come back down there. So fast forwarding to the next cycle, Bitcoin started to bottom out while the US dollar was topping out. The US dollar didn't really go anywhere for those couple of years, which then allowed Bitcoin to go on a pretty significant charge. And you can see the peak also coincided with the US dollar collapsing out of its top. So there's the top there for the US dollar. This was basically a bit of a distribution pattern, and then it crashed back down to these lows. The US dollar started to find some strength, and that's where Bitcoin went on its bear market. So rinse and repeat, same thing happened again. You've got consolidation, which then turned into distribution with the crash here for the US dollar price. Then you had the consolidation towards the peak of Bitcoin, where Bitcoin had already gone on its bull market while the US dollar was consolidating and crashing. And then rinse and repeat again, you've got a strong US dollar and a very weak Bitcoin price. So I know the US dollar and Bitcoin comparison and correlation has been discussed before, but what I don't think is brought up very often is how this pattern looks very similar to a distribution for the US dollar. And if we're to see this begin to break down, this would most likely send Bitcoin's price higher. The stock market's probably going to come up a little higher. or maybe a lot higher. Real estate prices are probably going to go further. And of course, gold is also going to go up further. Just because the prices are going up doesn't mean that everything is rosy out there, that the economy is going to charge on forever, but it will seem like that as the prices continue up higher. And eventually you've got to get everyone into the market. They're all positive about the economy. They're all positive about higher prices because, well, they see the prices going higher. And the best medicine for a bull market is higher prices. The higher the price goes, the more people believe it's going to go higher and higher. The times that we're in now for BTC, this current price, a lot of people don't believe it's going to go any higher. A lot of people believe that that was the peak and that the price is going to go lower. So they sort of wait this out and hope for for lower prices, only to find the price climb higher over the many days, weeks, maybe even months, like we've seen with BTC, and they miss out. And so they're just waiting for this price to go lower, and eventually it goes higher, and they come in later. So as I said, with the prices climbing higher, that's essentially what a bull market is about. People get on board later and later, and that leads to the peak. And so if we are seeing this final stage of the real estate cycle play out with the US dollar coming down, real estate prices going up, what I think is happening is Bitcoin will go up and the stock markets are also continuing higher, as we looked at earlier with the second highest daily close for the S&P 500 here. Well, then eventually we get to a peak and then a significant collapse happens. And I'm not considering that Bitcoin would go on another major 4-year cycle into new all-time high prices after that period. Now, I think that is 4, 5, 6, 7 years away. But it's interesting to note that once we do get the collapse of the real estate cycle, the US dollar does find its strength. And the previous real estate cycle low was around the early 90s, so 2 cycles prior, right? Early 90s, the US dollar found its base and then went on a rise to higher prices. The next base of the 18-year real estate and economic cycle was around 2010 to 2012 or 13. And that's where the US dollar, which is the bar chart in the background, found its base and then went on a pretty significant move to the upside, which culminated in 2022. And so I think we're on this move now to the downside for many, many years. And if this is distribution and this breaks down to confirm the distribution, well, that would probably lead to pretty significant declines for the US dollar. Now, it doesn't mean that the US dollar is collapsing and it's over and it's dead and it's finished, like you'd see a lot of other fear porn come out at you. It's just part of the natural cycle of the US dollar. However, over the long term, yes, it is getting weaker. You can't deny that. The price of it on the chart is getting weaker. We know there's more printing happening. We know that the US is in a lot of debt and eventually it's not going to work out. But they've been telling us that it's not going to work out for 40 years. And the majority of us haven't been around in the markets for 40 years. So we don't hear it. And the first time we hear it, we think it's the end of the world. So I think it's just something to be wary of, that the same stories rinse and repeat year after year for decades. Eventually something will happen, but it's important not to get too swept away with the fear porn because of the news cycles. We only hear it while we're in the markets and then we typically forget about it. Where does that lead us? Well, the last day was an up day of 3.2%, climbing high now to 59,000. It did hit on the 50% level of the entire range. So there's the August low to that August peak and basically dead on that 50%. So now it's testing that level and it needs to get back above the 61,500. So that was the major correction 50% level, right around there, 61,442, call it 61.5. It'll take you back above all of those swing tops as well. So that would be some pretty significant signs of consolidation and strength in this shorter term view, which could then lead to longer term moves to the upside. So I've gone through and explained that with the US dollar. I think we've covered that in great detail for this video. So that's your short-term look. The longer-term plays would again be above $61,500. If this is to come back down into the low to mid 50s, plenty of support still there. And the pattern would seem similar to 12 months ago. So 12 months ago, August, September, it's the same sort of thing, right? You've got a fake out to the upside, a fake out to the downside, another test to the upside, fake out to the downside. That was extreme fear. At Look at that one little bar here, right there. You can see the reading comes out the following day, but it's reading the previous day's market action. And that September 11 was very, very fearful in the markets. So we're 12 months on from that point, coming up to September 11, another anniversary, 23 years from the event in 2001. But the markets seem to dislike September. They don't seem to do great things, especially at these stages of the cycle. However, at the end of, in the case for BTC, September is typically a pullback within a strong trend. And I'll show you that on the monthly chart as well. So here is your higher lows, another test to high prices, and then a longer stretch to the downside, many days down here, which formed a higher low, then a push here in October, mid-October, higher low again, and then the market goes for gold after that point. The same thing happened back at the low. Obviously, it was November, December into January, but the pattern was quite similar. There was a lot of times where it seemed like it was just a fake out to the upside, a failed attempt on 50% or at 50%, and then a correction very close to the lows, putting in a new higher low, and then a move back to the upside. So stretching out the view here now, looking at something longer term and a little more hopium sprinkled on the top here for my Bitcoin and crypto lovers. We're going to look at the volume for September. And the interesting thing to note is that it's quite similar year after year after year, giving you the same sort of signs here. Now, before I get to that, I just want to shout out our free crypto and economic reports coming out today. Link is in the top of the video description. We go through lots of things here through the real estate cycle, Bitcoin, and cryptos as well. So if you want this delivered straight to your inbox for free once a week, link to that is in the top of the video description. And to you guys that are joining Premium, thanks once again. Your first month here. Well done, Lord Sydney, crushing it with a 30% gain in their first month, learning how to trade these markets profitably. Again, link to that would be in the video description. All right, so let's look at the monthly trends here for Bitcoin. I'm just going to take a look at September now. September's going back in history. Essentially what we're looking at is lower volume and turning points, typically turning points. And so you see a lot of the interest leave the market. You see a lot of boring comments come up, but then you get that turn, and that last quarter of the year does relatively well. It's not a guarantee, but you start to see at least a lot of movement. You can see in 2021, I'm not saying that it did well, but there was a lot of volatility. October was big, November was big, December was big. So there was a lot of movement. There was a lot of people trading those particular months. So September 2023, there was another low there. We know already about 7 months consolidation before it broke out. We're currently into our 6th month, which could potentially be the consolidation before we break out again. And the previous year to that, to 2023, was 2022. There is September, relatively high volume over that period. However, it was at the bottom of the market, which led to a turning point. You had the FTX collapse, and then the market pretty much did not want to stay below 18 grand for very long. FTX collapsed, consolidation happened, and then January occurred, and you did not see the market go back under $18,000. So that September was, again, very, very small trading days in terms of the price ranges, but you got some buying up because it happened towards the end of the bear market. So a bit of volume coming in and a lot of buying. People selling off, a lot of buying happening, because you can see the higher close there and the small range bar as well. And I say higher because it's pushed up off that low, and a lot of these the closes for the month were quite close. So that means that there was some buying going on. Even though you got this flush out, I mean, that was the biggest event of the entire bear market, FTX collapsing, and it's still talked about to this day with Sam Bankman-Fried, and it basically barely pushed the market down and didn't hold it down for very long, for the extremity of that event. Okay, so the year before that, going back to 2021, you got September here. That was the Chinese Evergrande collapse. Probably no one remembers that anymore, but that was huge news that month there. And all it could do was put a pullback in that month on the way to a new fresh all-time high price. You've got slightly higher volume than the other two up months, but again, lower volume than the down months here. So there wasn't enough selling going on to stop the market that September. Go back to the previous cycle, which is similar to what I think the position that we're in now for BTC. And you've got the August peak there. You've got a pullback in September, small range bars here in terms of price. You can see that there, the total month was 222. So you don't have too much of a pullback, and it was very short in terms of percentage from top to bottom, just 20% through that entire period there. And the volume was lower. So again, it was a low volatility month, low range price action going on before October took the spotlight, pushed it higher, and then you had a lot of volume come in as it broke to new fresh high prices. So this is basically everyone chasing their tails because they missed out on these sections. The year before that, 2019, again, look at September, low volume compared to the other down months. The market basically stopped out around those prices, 7K, got to about 6.6, came back up. Obviously that was COVID, and then it really didn't want to go below that $6,000 or $7,000 from that point. Year before that, 2018 now, there is September, low volume, low trading range. Let's keep going back a little quicker. This one here, I'd say is similar to 2021, which might be similar to 2025, looking at these sort of 4-year moves of Septembers through the Bitcoin cycle. You've got high volume here, but the market was bought up pretty strongly because you can see the closing price end up in the top half of that month. So a lot of buying happened, even though there was a lot of weak hands selling off at that point. And then you got that final run in the final quarter of that year. So again, similar sort of things when you're seeing the final stages of the bull market. Going back to 2016, September, low volume, low trading range bars. A boring month, essentially. September, low volume. You barely moved that month there. $22 in the entire month. So it's like a 10% move for that entire month. Here is September. Slightly higher volume, which happened in the bear market like it did in 2022 and came towards the end of the move as well. September again, low volume, a turning point before October and November took the market to extreme prices. That is your September yet again. Low price ranges. Let's turn it on logarithmic and low volume. September again, low trading range there, low volume. You get the idea. You've heard me say it over and over again. I wouldn't be surprised if September was similar. It'd be great if it wasn't, but it seems like this is what happens through those Septembers, and then things really start to turn around from that point. So, is that going to be the same for Bitcoin and cryptocurrencies? I suspect so. Essentially, you've got the Septembers that happened here for the total cryptocurrency market cap. I won't go through it in the same detail as I did with Bitcoin. Essentially, the total cryptocurrency market cap is mostly Bitcoin anyway, so you would expect that the same thing would happen here. You got the reversal there for 2020 and volume picking up there for the rest of the market, the breakout, and then the end of the move. You got September again, slightly higher than the previous down month, the turnaround and the move to the end. And then the 2017 final year of the bull market, there's a correction, high volume in the previous month, so the market's getting bought up, running into that previous top. What I do want to have a look at for the total cryptocurrency market cap, just a look at the prices and then the timeframes towards the end of the move. Above 2.2 trillion is strong. At the moment, still seeing at 2.03. Below 1.7 trillion is weak. So if you find yourself getting too swept up in the shorter term, drop it back to a monthly chart at this stage because of how slow Septembers usually are. And if September isn't slow and you start to see it really break out to some clean prices here, then of course, drop it back to a weekly or a daily. But to save your mental energy, just leave it on a monthly chart for September because maybe you see this thing dump to 1.8. Maybe you see it pump to 2.15 and then correct. And it's really not going to mean anything in the longer term because it's still within this choppy range that we covered here days and days ago. Now I'll drop it onto the weekly chart. Same sort of pricing here, going all the way back to July. So now a couple of months. The clear closing above 2 trillion would be the first start, and then 2.2 trillion. So essentially, the choppy range to me is all noise on the total cryptocurrency market cap until you see either a breakdown of 1.7 or some more closes above 2.2 trillion. So that would mean If we get those breaks higher, Ethereum could also head a little higher, above 2.8 to 2.9, still is that line in the sand for the strength to the upside, and the low here at 2100, that would essentially be game over for ETH. If you're starting to get monthly closes underneath these tops here at 2000 to 2100, not great for Ethereum overall. And for Solana, $134 is still that pretty significant level, 130, the 50% level, and then the lows there at 109. Now, the last thing I want to mention was the time frame. So I'll drop it back, or step it up to a monthly chart here. Tops to tops is what we're measuring, 46 months, top to top, 46 months from the total cryptocurrency market cap peak in November would take us out to September 2025. So in yesterday's video, I covered the Q4 of this year and Q1 of 2025 as a key time frame to watch. The second key time frames would be Q4 in 2025 to be watching for any sort of peaks coming out in the market, just based off basically one of these cycles here. And when we do measure out for BTC as well, they typically come out to be that Q4, maybe even as early as that sort of August, September area as well. But we'll start to note that later down the track. That's still about 12 months away. Here we are in September, and the peak, if we just did the exact same months from peak to peak this time around, would take us to September of 2025, which is, as I said, about 12 months away. So that's a broad look at the collapsing US dollar here, but not collapsing as if it's going to be taken over by another currency, just the falling prices in the second half of the real estate cycle, which typically leads to asset prices increasing in this final stage of that cycle, the winner's curse phase, which inevitably leads to a collapse after that point. But everyone has to believe that the cycle can't end, or that the price rises can't end, and I don't see that happening right now. There is still a lot of fear out there that the stock market is going down, that crypto is going down, not that it matters as much, but also real estate. The most important there, that real estate is collapsing. Your free crypto and economic report is coming out today, so the link to this is in the video description. And don't forget to click on the videos that are popping up on your left-hand side for yesterday's mammoth September update. Catch you guys at the next video. Take care and peace out.